How are we all doing? All right, let's hop on in. Looks like I'm a little blurry here on the VTF. I'm not sure if that's just me. Did I log off and on this morning? I don't think I logged off and on this morning. Let me log off the VTF real quick. I'm on the YouTube though. So actually, let me do this disclosure to start the YouTube, then I'll log off and on the VTF real quick. I'm an associate member of T3 Trading Group, which is an SEC, FINRA. Wow. I say this every day without looking at it. Now I'm missing my words. Let me start over. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer member of Pacific. All of my trades are placed through Trading Group. You should carefully consider whether trading is suitable for you. It might have your own financial condition. I need to update this. I take positions off. Roku and Lucid. I'm not in them anymore. Wow, I really got the Mondays. That covers all of it. I'm no longer in Roku or Lucid. Or Snap. I got a Snap too. Wow. Wake up, Derrick. Look at that. Position disclosure's a little light. I'm down to like 11 names or so. All right. Well, if the VTF's looking good, then I'll just continue. Okay. I don't think there's too much to talk about. We had a weak session. The S&P is down just over 1%. The Qs are down 1.9%. Seem to really be where the weakness was today. The IWM was down 1.2%. Even though at one point this thing tried to lead higher. Take the daily, then 5 minute. So yeah, daily chart here. We price corrected down to the ADMA again. And this is in front of a big week. We got the Fed on Wednesday. We got a lot of major earnings reports. Thursday should be a huge day. Apple, Google, Amazon. So we price corrected down this morning. We gapped down this morning. And bounced a little bit intraday, but closed pretty weak into the ADMA. I really don't want SPYs to lose 400. We're still above 400. So I would say from the short-term daily picture here, we are still bullish. Medium time frame, we are neutral. Large time frame, bearish. Maybe neutral now that we're getting above that downtrend line. Real confirmation I think will be if we're still above 400 after Thursday evening. So if Friday morning. You know what? Let me just say. Friday by the close, we're still above 400. I'm gonna say that's real confirmation that the big picture is neutral. The other confirmation would really be from a trend perspective. Get a close above SPY 410. So for now we price corrected down into that has big expectations as far as news goes. So we'll see what this turns into. Certainly not surprising at all. But if you want this short-term bullishness to stick, you want these key breakout levels to hold. So that's going to be SPY 400. For the Qs, it's 290. Oh, I didn't fix the volume. Man, I am all over the place. Thank you, Noah. Can you tell me if that fixed the echo on the YouTube? I bet it did. Fixed. See, I'm just like not doing anything right for this afternoon meeting, but that's because it was such a boring day and I don't cut my head in the game, which is exactly what I wanted, by the way. I didn't want my head in the game today. I wanted to be able to take a step back, but I'm going to get to that in a second. From the perspective of the Qs here, again, week open, bounced a little bit intraday, closed pretty much on lows. 290 is the key level for the Qs, but the ADMA hasn't caught it yet. So what I was really saying in the morning meeting is the Thursday low, 288.51. I think that since the ADMA hasn't caught up to 290 yet, it can be a little bit loose. But from a closing basis, if you're a bull on the smaller time frames of the daily chart, you cannot have this market lose 288.52, which is Thursday's low. We are still above that, even if we ticked back below the declining 200-day today. And the IWM, the key level is 188. This one we actually got below and closed below today, but similar situation. The ADMA has not caught up to 188 yet, so that level is allowed to be a little bit looser. So the real spot that I'm paying attention to for the moment is going to be this Thursday low of 186.29. You lose 186.29, then you lose a little bit of that short-term bullishness for the market. But I really think that we got to get through Wednesday and Thursday. We can have our technical picture, we can study our technical picture, but when you've got such a major event that is going to certainly be market moving, a few of the biggest companies in the world all reporting on the same day on Thursday, and obviously the Fed on Wednesday, which I'm always nervous about. Whenever this market's performing well into a Fed meeting, they seem like they do everything they can to really drive us down. So, coming into today's trading session with this little bit of a gap down, whereas that had been very viable on these previous days, very viable on the Microsoft day, which was the 25th, very viable on the kind of day and a half pullback on the 19th. I just didn't really want to go after this one in an aggressive way. We had a pretty decent bounce back off the open of this common gap. The market filled a good percentage of it. For the IWM, it actually filled the entire gap. We fully filled that gap. The SPYs just kind of got into their equilibrium area. The Qs were what was relatively weak. It seemed like a lot of those mega cap stocks just couldn't bounce. I remember looking at Amazon because it was relatively strong pre-market, and it was just really struggling in here. The bounce wasn't that great, then it really weakened out. Same thing with Apple. Apple was really struggling, breaking lows here when the market was trying to work its way back up. So you had weakness really in these mega cap tech stocks that are, some of them are going to be reporting later this week. Growth actually was holding up really well off the open, a lot of those names. We had a couple of good trades there, and then they kind of rolled over a little bit as well. So my game plan coming into today was just not to be aggressive. I think it's been a pretty good month. We've had some great call-outs as a team. We got some big things coming up, so I'm not looking to do anything too spectacular or too fancy. A day or two in front of the Fed and a few days in front of these major earnings reports that could really be market moving. My best trade today and my biggest focus was really on this Carvana. We were looking to see if we could get some continued short squeezing today. Carvana, I liked the idea. Josh was the first person I saw to bring it up in the morning, and I looked at it, and I actually already had an alert out for that $8 area. 8's where I really wanted to buy this thing, and I was going to mention that in the morning meeting, and then it gapped up well above that 8, and I was like, oh man, did I miss it? I don't want to pay up too much. So I decided to pay up to basically 8.25. So I got filled kind of like a core position at around 8.25. I actually added a little bit, I think at $8.16. Initially I was using $8 as that stop loss. The spot that I wanted to buy instead became basically my stop. I wanted the area that I thought would be the breakout, that I thought would be resistance, since it was gapping up above it, to kind of act as support. I also liked the idea, one, because we've been seeing more of these short squeezes lately, 2, because the daily chart looked really good, but 3, just because of what happened to Lucid on Friday. This thing on rumors of a buyout, which I personally think is kind of BS, and I know Pat was posting someone else that was kind of saying that also, but this Lucid, regardless of whether it's true or not, was able to rip from $9.35 up to $17.80 on this insane move. I thought it was interesting that the information that Pat provided was that this is just a couple days after a lockup expires. So that's kind of wild. Originally, I thought that this was just entirely because of Tesla giving this big move and Lucid acting as a little bit of a secondary to it, but the word came out that maybe there could be a buyout right as that lockup expiration happened, and the thing went on that insane move. But all the same, you're getting squeezed in one area. Sometimes you can get squeezed in another area. There's a good chance that if you're running a fund that's short Lucid, you're also short, Carvana and Rivian and some of those other names. So you combine that with the daily chart, breakaway gap this morning. There was just a bunch of things to like about this thing as a trade. And this ended up being the only thing that I really aggressively traded today. I guess I traded SoFi a little bit aggressively, especially pre-market also, just kind of off the earnings report with some decent success. But Carvana for sure, the only new position. We caught this great move up here to $10. I was gonna hold it and just trim and trail because I remember being annoyed at myself. You guys know I was swinging lucid, and I got out of this lucid. I got out of lucid in front of like 11, I think, because I was like, wow, this thing has just gone way too much. This thing's way too extended, and then next thing you know, it's at $18. And that's the whole thing with momentum, is that you really never know. A stock that seems irrational can become more irrational. The trend is your friend. Momentum can be a heck of a thing. Choose your catchphrase expression there. But obviously, looking back at this lucid after where I got out to where I went, I was like, oops. And I was like, maybe Carvana I should hold. But then Chris convinced me, if Chris is listening, and he was in it too. And when he told me he got out at 10, I was like, you know what? This thing's pretty extended. I just don't believe in these companies, which makes it pretty hard for me to really hold them. So I got out at 10. I actually flipped short. That same, I've been doing this trade a lot more recently on the intraday basis. These kind of like extended RDR, DOO, whatever you want to call them, trades on like the very small time frame. So I'm watching this Carvana into 10. I liquidate my long. It puts in a high here of $10.15. Originally, I was thinking, maybe I'll short back through $10. I might be able to get a move, to $9.50. And by the way, the short here I took with less than a quarter of the size of the long. This is always going to be a much more difficult trade. It's inherently a trade that's lower probability and is going to be providing less reward potential. So as a result, for me, I'm taking less than a quarter of the tier size, and my space risk, even at less than a quarter of the tier size, was a good bit less than when I actually purchased it, right? When I'm buying this thing, I was buying with 25 cents risk. I averaged down a little bit. Here, I shorted back through $10.15 versus highs. So I'm risking like 10 cents on this thing. I'm risking less space risk, and I'm taking less than a quarter of the tier size I took on the long. So that just shows you like how much less from a percentage basis of the risk I'm actually taking on the trade. And that's exactly what I want to do, right? Whenever I'm talking to you guys about the idea of risk skew. You want to base risk skew off of risk reward and probability of success. I thought that the risk reward of buying, $8.25, if a real breakout comes in, a real short squeeze comes in where they could rip this thing to $10, $11, has a much higher reward potential and probably a better probability than shorting on the way back down on momentum. But the trade here again was that kind of small time frame RDR on the big extension when I'm shorting on the way back down through the previous bar. So I think I did it with a sell stop. Not 100% sure, but I think I did it with a sell stop. Where on this candle right here, the 10:05 candle, you can even see it. See, this is the short execution dot right here. On this 10:05 candle here, I basically am watching it trade above the previous bar's high, and I'm putting a sell stop. I think at either 10:14 or 10:15. You can see I think it executed with a few pennies of slippage. Covering my risk here, taking off a little bit more, and then all I wanted was move to the 80 MA on the 5-minute chart, just back down to that equilibrium area. And this is me fully liquidating the position. I'm not holding any of it, and I'm just done for the day on it. So that was kind of my big intraday winner of the day. And outside of that, I didn't do anything. You go back to the small time frame here. You had that IWM attempting to lead this market up, and then this sell-off was just way bigger than it should have been. It was led down by the Qs. Thought maybe the IWM could stage a bounce here, and that Q weakness could hold in, but it didn't happen. IWM really weakened out, and once these things are giving 100% plus retracements, I just don't want anything to do with really kind of coming in and buying stock. Now it's just a matter of, are we going to grind lower? Is the price action going to be choppy? Are we going to be able to hold our key levels? I know some of you guys maybe are even looking at kind of shorting along this this trend line. I know Cold Smoke Brian, if he is following along in the afternoon meeting, he seems to like those trades, or he's been calling them out a lot in the VTF. These little, you know, lower highs in the market as kind of intraday shorts. For me, you know, I'm being maybe a little bit bigger picture where I totally understand and support that trade, but at the same time, I'm looking at a market that's still above, you know, key daily chart levels. Yeah, for sure, for cash flow. I'm still looking at a market that is mainly above daily chart levels. So for me, I'm just pretty much not doing much of anything into this entire afternoon trading session. And at the end of the day here, kind of proud of myself because I didn't do too much, and that was my plan. My plan today was to not do too much, and you know I still got to have some fun trading some SoFi and trading some Carvana and managing my positions a little bit, but stuck with the game plan, kept it simple, and you know I'm probably gonna stay in this mode until we get through Wednesday and Thursday. And yeah, and that's it. That's all I got for you guys. So I'm happy to answer any specific questions that any of you guys got. First and only question I'm seeing for the moment is from Dave S. Wanted to ask specifically about looking at volatility products such as VIX, VVIX, and UVIXI from an intraday trade perspective. Are you looking for candle patterns on shorter time frames, only spikes both higher or lower, or just general direction? Any and all details are appreciated. Sure. So you know, Pat's really started to incorporate the VVIX a lot for the team, and that's definitely appreciated. It seems like the VVIX is leading the VIX, which is leading the market in a lot of ways, and it's led to Pat having some fantastic calls. I don't pay for the market data anymore, and maybe I should, where I can see like the cash VIX or even the SPX directly, because if I can't trade them, I don't pay for the market data, and I just feel like I can look at UVIXI or I can look at SPY, you know, just to more or less get the same information. But it's not really true with VVIX. So really appreciate Pat, and I think Tate's been getting in the information there a lot on the VVIX as well, just kind of on, you know, when he's seeing a divergence or, you know, where price is on that, because it really seems like that's kind of been the best one to pay attention to. So, you know, as a general rule, as a very general rule, because it doesn't always follow this, the market and the VIX should be trading inverse of one another. So I am oftentimes typing up, just as a quick snapshot, UVIXI, even though UVIXI is a horrible, horrible ETF, a terrible product, is literally designed to only go down over time. So looking at the daily chart of the UVIXI is really a complete and utter waste. But on the intraday, where the decay can't really affect it too much yet, I'll look at this thing a lot just to see what the chart pattern looks like. Is the chart pattern confirming or not confirming what I'm seeing in the SPYs? And I'm pretty much using it as a layer of probability. You know, if I'm looking like UVIXI is topping out, or it's really working its way lower, or whatever it is, then maybe I have a higher probability on my long trades with the market. And I do pay attention to the cash VIX, though not really from a charting perspective so much as an absolute perspective. I just kind of want to know what that number is for a couple of reasons. One, for a lot of the previous calendar year, pretty much the entire previous calendar year was short VIX 20 and buy VIX 35. And I'm talking about shorting the market and buying the market. Whenever the VIX was getting up to 35, it never really had that blow off top in the VIX into the low 40s that everybody seemed to want for a market bottom. But throughout the entire year, whenever that VIX started getting towards 35, you know, it was just a great time to buy the market. And whenever the VIX was getting to 20, it was a great time to get out of the market, get out of your longs, and or potentially short. So I pay attention to that a little bit more on an absolute basis. I also pay attention to it just because of what it represents, right? It's supposed to represent volatility, and it comes from the options, though there was that really interesting article that I read through Zero Hedge that had gotten circulated a little bit, which is worth looking up, about how this calendar year we might see a lot more instances of the VIX and the market trading up together. And you know, there's been a lot of chatter on why the VIX itself never got much higher, and it seems like the real reason for that was because, again, we have to remember about the VIX is it's coming from options. So if people are using options to hedge, it helps spike the VIX a little bit more. But if everyone's out of the market and they're just in cash and they don't need to utilize options in order to be able to hedge, that brings down that number a little bit more also. So that was one thing that was worth paying attention to this year. But also the systematic flows. Generally systematic flows into the market are going to increase when volatility comes down. That was actually some data that was also worth reading, I think from the Goldman Sachs portion of Pat's note this morning, where he was getting that information from Goldman's latest update, where and there was a few things in that report that I thought was really interesting today. But they were basically saying that they think that you could get a continuation of this leg higher as volatility dies down, because you're getting more of that systematic flow into the market. So that's another reason why I'm kind of just paying attention to VIX, is just for an understanding of things. And then the VVIX is like, if the VIX can sometimes act as a leading indicator to the market, the VVIX can sometimes act as like a leading indicator on the VIX. So, the volatility of the volatility index kind of thing, which in some ways is almost funny, but it's shown to really, when the market is diverging from the VVIX, actually be a pretty strong signaling mechanism. I know Pat was really chattering about that VVIX divergence that started midday on Friday, that I think helped to lead the market sell-off that we actually had right into the close. This heavier sell-off. I think that VVIX started diverging in the middle of the day. Short-term divergences are something to pay attention to. They're not the end-all, be-all. I find that the VIX divergences from the market start to really matter if you see it as a multi-day phenomenon. If you see like 2 to 3 days of continuous divergence where the VIX and the market's going up together, that's usually like a much bigger signal. And I've seen that really precede market tops on a couple of occasions as well. So at the end of the day, it's a layer of probability. And I'm not trading these products. I'm not really trading UVIXY, though I have in the past, and I have traded VXX in the past. When VXX was easy to borrow, I was shorting it all the time, because the decay was just helping me with the trade. But yeah, so that's pretty much it. I'm not necessarily looking at specific candlestick patterns, but I am typing up that 5-minute chart of UVIXY during the day, just to see if it's confirming price action or not and what it looks like. Hope that helps Dave. Kate is saying the key of VVIX is incorporating it with how the SPY is trading and paying attention to it when exiting and entering positions. It's another layer of probability. Yep, that's exactly what I'm doing. From Mike Reed, I've got a long position on that's fully covered with some reasonable size, and the stock has given me some profits on the way up. In the spirit of maximizing profits and being willing to give back to my initial stop, do you have any rules around the idea that the stock could be at a place which could potentially gap down under your stops? For instance, the day before it comes down and is within the daily ATR of the stock, do I follow the usual 15-minute rule that you've mentioned swing-wise? Again, my apologies for the long message. No problem. Let me actually try to reread this a little bit and just kind of dissect it. So you got a long position, you're working on maximizing your profits, you're holding it, you got some stock that you're giving back to an initial stop. Do you have any rules around the idea that the stock could be at a place which could potentially gap down under your stops? Yeah, so this has been one of the trickiest things I've ever found about swing trades. So based on the rules that I have. Right, so the rule that I have is, you want to take your swing trades, you want to keep them overnight to maximize reward when things are going in your favor, right? That's the 1% rule, the win-win rule, whatever you want to call it, where, and it's really a guideline, not a rule, where you want to be at least 1% in the money in order to keep that position overnight initially. Once you agree to keep that position overnight, then you want to really utilize that daily chart. You can use your initial stop loss as a stop, but then at a certain point you want to try to trail on a daily chart for reward maximization. So now what happens if you've committed to keeping this position overnight. You're swing trading it. You've got that 2% cushion, and then the next day the market pulls down to almost near your stop, but it doesn't actually trigger it, right? And now do you keep the position overnight even if you've got less than 1% of a profit cushion on where the stop should be? The stock could easily gap down past your stop loss. So that's like not a great position to be in. Because you're trying to maximize your reward, and now the stock pulled against you. But it almost there's been periods of times where I'm almost like, just please stop me out, because if you don't stop me out and I got to keep you with a 10-cent profit cushion, you could easily get past much further than I wanted to risk. So it's like I'm almost wishing sometimes that my swing positions will stop me out when that circumstance happens. I don't get out. That's what I do, and I'm consistent with it. I don't know if it's the right thing or the wrong thing, but even if it got to 5 cents away from my stop loss and it's an expensive stock, but it never actually triggered the stop, I'm going to keep the position overnight at that point, even though now there's a much higher probability that it could get past my stop loss and I could lose more than I want. So that's one of the bigger risks on swing trading, is that stock can, stock can the stock can gap past your stop. And that's one of the stickier situations to be in. I would say, implement some discretion. If it's a dangerous name and you've got big size and there's going to be a market event the next day and it didn't quite trigger your stop, but you hit out a little bit early just to defend yourself, I don't really have a problem with that. Though generally, I would say whatever you choose to do for yourself would be something that you want to try to stay consistent with and do it every time. And honestly, totally separate, but part of my thought process when I got out of Carvana today on the long side was keep it consistent with the fact that you got out of Lucid when you thought it was extended. So, and you could easily argue that I made a mistake on Lucid, right? I shouldn't have gotten out where I did, but I did. So now I got this Carvana. What do I do? Do I try to hold it even longer because I could have made a lot more on Lucid? Or do I be consistent and I just get out into extensions similar to what I did to Lucid, even if that maybe wasn't the right thing? And I, when in doubt, will usually choose to try to be consistent with what I'm doing. So, yeah, that's kind of how I do it. But I would also say implement a little bit of discretion. If you're going into a CPI day and you don't have much of a profit cushion and it's near your stop loss, maybe you just want to hit out. I hope that helps. Cool. Anything else? No, it's not too much today. Quiet day. But if no one has anything, I'm happy to wrap things up. Let's see if there's anything on the VTF here. Sorry, on the YouTube. Yep, had the echo in the beginning, but we fixed it. All right. Bobby on the YouTube is trying to convince me to not broadcast these on YouTube anymore. I'll keep it. I'll consider it. But you're gonna upset some people. See, the thing is, Bobby, and I'm not gonna read everything that you kind of just mentioned here. He's basically saying, why would I spend $5,000 for access to the virtual trading floor that you guys have when I'm able to just watch the afternoon meeting for free? And there's two things. One I would mention is that if you have an account with T3, you can actually get the virtual trading floor entirely for free by just having your account here. Everybody's trading with an account somewhere. You might as well do it through T3, and then you can have a $5,000 value for free. The second thing that I would say is, yeah, the afternoon meeting, which is really educational in nature, is something that I am doing for free through YouTube. But if you want access to the ideas in real time, if you want access to the real information that I think will actually make you money, Pat's note, the news, the option flow, all the real chatter in there that's most important, that's the stuff that I think will really make you money, then you need access to the virtual trading floor. And again, you can do that by being a paying subscriber, or you can do that by having an account with T3. But I'm also trying to build, the main reason I'm trying to build the YouTube up is to get more people to be able to be involved with T3, either through accounts or through being a paying subscriber. And you're just, you know, well, you get a little taste if you're in the afternoon meeting on YouTube. So hope that helps, Bobby, and I hope you're enjoying tuning in. From Nick P. back in the VTF. Can you speak on some best practices for halted stock momentum trades? We spoke a lot about Lucid in recent days, as well as GNS and BBAI for some examples. Yeah, this is not an area that I've ever been particularly good at. So you can see, so there are traders out there that I know, and I don't really know exactly how they do it, who can tell when that stock is going to be halted, how the thing is probably going to gap after the halt, and they'll position themselves right into the halt. Like right as they see that it's going to get halted, they'll be buying or selling stock with an expectation of how it's going to gap after that halt. I don't know how to do that. I've never been able to figure it out, to be able to do it, you know, profitably, with the exception of maybe certain circumstances where, you know, it's on the way up or it's on the way down and you're kind of just looking for continuation after the halt. But it's certainly dangerous. You can see when a stock is going to get halted, like we saw it in Carvana today when it actually got halted. In your level 2, and I don't think it's here now because the market's not moving, you'll be able to see, at least if you're on Lightspeed, LULD as like a ECN. It's not an ECN. It's just that like limit up, limit down rule where it gets halted. So if the stock is moving fast enough, and that LULD, if the stock's moving normally and the stock is going up, the LULD gets further and further away. But if stock explodes really fast in one direction or the other, it can catch that. And if it catches it, that's when the stock actually gets halted. So you can see the stock getting close to it, and then you can see, like, a lot of time, like right when it's about to get halted, the stock gets like stuck for a few moments, and you can actually still hit out or hit in when it's getting stuck. And I remember with this Carvana, oh man, I guess it was $9.15. I can't see it in the chat anymore, except it must have been right here. The high of this bar is $9.15. It ripped up here and got to that LULD. And then 9.15 was that inside bid, and there was just red prints. It was just stuck there. And if you wanted to, you could hit out. So what I do in that situation, and I'll tell you exactly what I did here. So when Carvana got to 9.15 and it got stuck there because it was about to halt, I actually had an offer at $9.16. And I'm looking at it and I go, oh, it's going to halt. So I need to do one of two things there. There is no point in me sitting at $9.16 right now. I should either just hit the bid at 9.15, because why do I want to risk being involved in Carvana during a halt to make a penny? Doesn't make any sense. So I either need to hit that bid at 9.15, which I considered doing for a second, or the opposite. Meaning, and this is what I did, I actually got rid of my 9.16 offer and I threw it up at 9.49. I said, all right, I'm going to stay with this piece of stock that I'm offered at 9.16 through the halt. I'm not just going to hit the bid on it, even though I could. It's giving me a moment to be able to do that. I'm not going to hold it through the halt to make an extra penny, but you know, I'm just going to throw this thing up at $9.49, and we'll see if I can get filled up there, and I'll make an extra, whatever, 35 cents or something like that for having to deal with holding it through a halt. So you want to be able to see it as it's coming, and if you're already in the trade, you might take action. Like I'm saying, if you're close to getting filled on an offer, just either hit that bid real quick right before the halt, or try to make actually significantly more on it. That's about it. You know, generally, I hate being stuck in halts. You know, it's one thing if it's an LULD, but no, you know what? Even I take that back. I hate being stuck in halts. Period. Especially if it's going the wrong way. I've had a couple really bad experiences. Being stuck in halts. So as a general rule, I'm going to say try to not be involved in stocks that are being repetitively halted. I was stuck short in Kodak one time. I'm sure I can still find it on the daily chart. It's going to give me nightmares tonight if I have to look it back up. This stupid BS stock. Yeah, back. Must have been. Was it back there? Was it that the one? I thought it was earlier than that. Maybe it was this one. What was the high of this one? No, it was this one. It was this one. You can't even see the high. It went to 60 something or 70 something. Yep, this one day here, and I couldn't get out of the. I was stuck short. I couldn't get out of the position. It would unhalt for like 3 seconds and instantly go LULD again, and it would just be against me, and then it would just gap up massive and be instantly against me more, and halt again, and gap up massive and be instantly against me more, and then again. That was really, really bad. And I was stuck in Luckin Coffee, LK, when that thing halted. I was stuck in that LK with, like, I don't remember, 15,000, 20,000 shares for like 2 months or something like that when it was going through that accounting scandal. Luckily, I had a good price. I bought it after the gap down. LK was trading at like 20. They had an accounting scandal. The next day, whatever, it was at like, I don't exactly remember, $5 or something like that. And I was buying because I knew that even though there was an accounting scandal, that there was a real that it was a real company, and I ended up getting super lucky. It was a really dangerous spot. It was like $5 stock. I don't exactly remember the price. I had like 15,000 or 20,000 shares. They halted it because of the accounting scandal. And I didn't know if they were ever going to unhalt it. I thought that was, that the money was just going to be gone. And NASDAQ, for whatever reason, basically bailed me out because they did delist it, but they unhalted it and let it trade for like a week. So it was halted for like 2 months. They unhalted it, they let it trade for like a week, and then they delisted it. And I was right. It is a real company. Wherever it went to, the pink sheets or whatever, the stock is probably in the 20s now. It's definitely, the company still exists over in China. They just were lying on their accounting. But in my mind, the thing was never a zero. So I was looking at it. This was, I don't remember what the prices were. It was like a $20-something stock. Now it's a $5 stock. I was building in. I actually ended up making money on that thing overall. Not a lot. It was very scary, but stuck in a hole for like 2 months. So general practice, try not to be involved in halts. That would be my general advice as a general practice. But otherwise, the only other piece of advice I have is, recognizing when it's going to get halted and being able to hit out of some stock. All right, cool. Anybody else have anything for today? Otherwise, I will wrap it up. It's cold. All right. Have a great night, everybody. I will see you all tomorrow.